Good afternoon. I hope everyone had a great weekend. We are opening on ES Weekly chart here at the close on Friday. We were testing into the short-term 161.8 extension 62.30.75 near the highs, and that resistance box extends up into the all-time high 62.88.75. We do have a positive divergence here on the accumulation distribution relative to the previous highs here, though I would suspect that we see more compression in range at this point and less of the expansion that we saw over the course of the last week. We did have support at the tertiary 76.4, 59, 57 and a quarter, and we are trading right around the point of control on this time frame as well. If we go into a daily chart, again, we see the positive divergence on the accumulator. And within the short term, if we just draw one more retracement here, it gives us our short-term support range of 6,066. So if we are to assume that the 62.30, 62.88 levels are going to act as resistance, then we would at least expect for a little bit of cleanup here back down into the range we saw at the beginning of the week down here into that 60.66 level at the point of control on the move from the April lows, which is also sits at 60.31. So we would say that the support range for this shorter term market is 60.30 to 60.66, assuming all things constant and really no risk. We did have 59.57 marked as the buy last weekend. It is now been tested, so we'll move it up into the 60.66 range. For this market to really have any issues, we're gonna have to see that break below that 59.57 is flagged, and thus far there really just isn't anything that suggests that that is the pathway forward. On the weekly chart here, we have an inverse head and shoulder actually building out on the chart with the left shoulder here. That's just about 17 weeks or 119 days. And so if we assume that the consolidative pocket is, one second, if we assume that the consolidation starts around here and we're looking for 17 bars, then we're out to just about the mid of September before this pattern would have the option to break up and out. Obviously, it doesn't have to stay in the pattern. This can break up and out. There's no real, because we're here, you have to short type idea. But because we're within this volume node, we would expect more of a consolidative process, I would think. So option down into 60.66, cap 62.88. We also have that JPM caller that expires this week on Monday, but given we're so far away from it, that shouldn't really impact price or price action on Monday all that much. I think another thing to be cognizant of is the Core 1M. The Core 1M for a long amount of time has resided above what we used to consider the supportive market threshold, but we have returned into this area in between about 850 and 18.5. In this area, generally what we see is only certain stocks carry the market higher, whereas above this level, it's usually a larger basket of stocks that are carrying the market. You're getting more participation across all sectors, whereas down here we're talking maybe we're looking closer into the top 50 stocks in the market to really create that move. That's not to say something outside of that can't move. It's just that in general, the concentration of the movement that we will see will come from heavier weighted stocks. Flipping over to Apple Weekly, we have support still being given within that threshold of range from 186 to 198. That's the primary 23.6. While price does remain above this level, there's still potential for this compression to break up and out and retest into the gap at 220 and the 61.8 up at 225. You can see this a little bit closer on the daily. Whereas we're now building out this volume or this node of volume here, and any release up above about the 203 level, the retracement on it on the short term is actually 206, I believe. Yeah, 206.42. So any move back up and over 206.42 leaves that option up and out for the gap fill into 220 and the retracement up into 225. On to next is Microsoft. Microsoft, just such a workhorse here since almost May when they came out with earnings. Price is testing up into 500. That's a pretty big round number after such a trend break. It's not like it's something that would want to be shortable, but also you're really looking for a move down into some major supports for viable points. Either this uptrend here, or even the volume shelf higher at 41 really is a viable point up in here. For that retest up into 500. If we do start to see some sort of topping pattern or the accumulation distribution start to turn down, though, this may be all she wrote for Microsoft. There's other stocks that aren't chasey and look a little bit better within the top weights, as well as a few that are within the top 50. So while this is still sitting up against 500, it seems like the RR probably just isn't here for the long side on Microsoft right now. On Tesla here, we continue to see rejection up and into the resistance box framed at 331 to 341. While price remains below that area, there is a structural test that can be had down into 302. We can see that here on the daily chart. Small gap to fill, 61.8 of the short term, 38.2 of the lifetime. So do think that that move is an option, but really more of just a consolidative process, right? We tested into supply and it held. There's still demand below price. So really, the biggest range you're looking at here on Tesla's drop is either 302 or down into that 290 range, likely, unless something comes out that's more impactful to the business. But on a chart perspective, this is really just a consolidative process below a major retracement up here at 383.76. Next, we have Amazon. It was a really nice close there on Friday. We had a consolidative period of time here from back in early June into this week, where price maintained that 212 to 215 range, and on Friday we saw that open up and out to test the tertiary 76.4 at 223.37, and the lower end of the resistance box there from 223 up into 225 and a quarter. While price does remain above that consolidative top at 217, 217.5 or so, this does still have option up and higher into the volume node into the 228 and 230s in the near term, as well as any test into that 213 to 218 viable for that test into that 228, 230, then option up into all-time high at 242. Google, really another one that had a great move on Friday as well. Tested into the initial resistance up here back in 9 of June, 10 of June, 178 to 181. Saw the drop back down into the point of control with a signal off of the envelope buy, and thus far right back up into the resistance zone. If we do see that 182 break, it really opens up this entire range up into even gap fill. This node of volume should continue to act as demand on any retest floor, and if we get a hold over 182, it likely starts to inhibit a bit of chasing as well from long-term shorts trying to close up positions and offering a move higher through range. There is some volume up here into this 190, 197 area as well. But ultimately, I think anything over that 182 opens this entire thing back up into the 200s to 207s. And last but not least on the top six, NVIDIA. Great move on NVIDIA last week. Obviously, we're up and above previous all-time high that was at 153.13. There's a volume shelf down closer to 145 that's going to offer support if there's a back test. It is a little hot right now. We do see that we are extended out into overbought and undersold on the ADX indicators. So while this doesn't have to come in, we would expect it to potentially lose a little bit of steam. Maybe return down into this 145, get some new buyers, and then have that potential for up and out. That's not to say that I would ever short it, but it's just saying that there is that exhaustion option. Ultimately, 174 and 194 being targets for NVIDIA. As mentioned earlier, with that Core 1M as low as it is, we're really looking for stocks within the top 50 or so that have the potential to carry the market higher while everything else stalls out. So we're looking at Microsoft here. We have a nice consolidated pocket really between 275 and 310 where the second and third term on this chart, 61/8 reside. The longer term extension, 161, is also at 282, and price is trying to base that longer term extension, which is definitely a positive. If we come down into the weekly chart, we see that base a little bit more. And so I'm thinking here, there's one of two options. It's either probably a sell to open an iron condor short term 275, 310, or it's a waiting for that 310, 318 area to break. And then that's going to offer us quite a bit higher out of McDonald's. 309 break offers back up into uptrending supply, which thus far has been tested on a multitude of times. Right now, that uptrending supply is closer to that 340 area, which is also the extension 161.8 of the last time frame. So over 309, option up into 388, and then just really to carry the trend up and higher. This is a longer term consolidated process. This is a weekly consolidation. So this is when this does open, it's going to open for range. It's not going to be some small pop. It's likely going to be extension quite a bit higher. PLTR is a fan favorite that had a bit of a rough day on Friday here, dropping 148 all the way down into 130. We do have two levels of Fibonacci retracement here in the 129, 130 level, as well as the resumption of a volume node and the short-term point of control at 125. So I would say that any test into this range does offer a long side opportunity. Obviously, any move below that 130, we're going to need to see a recovery pretty quickly, just up and out of that support box. But given how quick that drop was, we can see it bounce just as quick. If we want, we can put a shorter term 61.8 on, and that offers that target up into 141.46 versus that 130 hold. Next, we have AT&T, or symbol T here. Nice consolidative process here over the last several months. We have an ascending triangle building here in the stock. Anything over 28.59 offers a long into all-time high plus. This is a 3-point range at 71% is just about target 30.50 on the breakout after all-time high. So this is going to be offering something between 5 and 7% of a break on the initial at 28.60. Nice risk as well, nice compression. Again, this is one of those that could be traded as a sell to open iron condor, probably between 27.5 and 29 on the short term, with a longer term call side to collect any move. And then obviously on the break of that 28.60, you just get rid of the sell to open iron condor, hope you've collected some of the decay, and then you let the calls expand up and out. The next one is Walmart, WMT. We have a tight consolidation between 95 and 100. The point of control on this time frame has also built out at 97.50. Any sustained over 98 and hold over 98 opens into 189 and then up into 105.30 with option to break out. Accumulation distribution is sitting up at all-time highs relative to the previous all-time high, so positive accumulation there as well. I think any break under 95 would likely be the release of the upside trade. And last but not least, United Healthcare, UNH. We've had a healthy consolidative process between 300 and 315 since that bottom on around 250 off of the newsprint. If we do get a move back over 315, it's going to start to allow a little bit of slippage as these short-term shorts have to close up shop, offering likely up into 339, and any move above 339 can really start to offer the slippage all the way back up into 380. Any exogenous news source that's positive can definitely get this one moving as well. I think overall it's important to remember that the stock market is like any machine. It has a lot of components that function together and are necessary to function together for it to maintain the order in which it works. The issue only arises when there's a cog thrown into that machine that stops that functionality here. Going through the top weights, we see certain stocks that look like they're ready to break out, certain stocks that are topping, and that's fine, right? Microsoft has carried the market for quite some time. Now you have stocks like Apple, Amazon, and Google that have decent looks, as well as Nvidia setting all-time highs. So overall, until something is thrown into that, the VIX is going to continue to grind lower. Markets are going to continue to grind higher. Obviously, if we have some sort of news-related event or a spike in bonds, things like that are going to create issuances. But while this market just continues to grind, even here we see even a loss of 150, 180 points is only going to bring things back into a supportive point again. We often say to look left on the chart, and it's to see what happens at those price actions, right? And here we have support at 60.55, support at 60.55, massive consolidation here as the breakdown started here at 60, 60.50, 60.70. And so we would continue to expect those types of retests and support bounces against that short-term 6218 as well, 60.66. Um, so we'll see moving forward how the week goes. But ultimately, at the end of the day, we should just continue to expect more of the same. Hope everyone has a great week moving forward, and I will see you later.